Aloha, everyone, and welcome to Java. This is for Wednesday. It's August 23rd, 2023. Thank you so much for joining me here. We are going to be looking at quite a few things once we get past these markets and some stories. I've got a couple of items that I would really like to ask your opinion about. I think these are important things, but I want to know if you want them included with this channel because I've got some digging in that I'd like to do on them. So, with that, let's get through the markets. Yesterday was a volatile day, and we were kind of expecting that. Did pull back a bit from the high risk area, as you can see, but we're still well up there. The 10-year yield came down below that 4.3 level that the market seemed to really not like. And we had a bit of a recovery after the dollar softened up and lost a little bit of strength, allowing the stocks to recover in price. So pre-market today, bit mixed. Market's kind of trying to figure out what's going on. Futures more toward the positive, basically. Today we are expecting PMI numbers as well as new home sales. So yesterday we had existing home sales, which we had kind of figured would be low because there isn't much supply. So it's kind of a given. Today will be a little bit more interesting. I think we're going to be higher because the builders have been really the larger contingent selling. As I was saying, they were offering incentives and able to get more buyers in. So let's get into what is actually moving these behind the scenes. So I want to talk a little bit about oil and energy. The US crude stocks are still down. They still are a little low on their stockpile, and Saudis have pledged to keep up with their cuts at least through September. So that's going to be bullish basically for crude in a bit because there is a need, there's a demand, and also Saudis are kind of choking out supply. So we had a couple of comments from Fed's Barkin yesterday. And so he was talking about the reacceleration scenario. And really what he means is that they're looking still at probably hiking rates because if inflation gets hold, they see more risk to that. So moving on to the BRICS summit did start yesterday. And what they're discussing more is call for a local currency trade. And this was the big one, expecting to move gold and the markets, because there was a lot of talk about a gold-backed currency, which, as I was talking about before, there is a lot that has to happen in the works behind it before that can actually be a reality. And they're not there yet. And they're still borrowing and trading in dollars, although they are rapidly trying to get off of that. So I think it's going to eventually happen, maybe not be gold backed, but at least gold pegged. As I said yesterday, I'm guessing probably a combination like we do the basket of currencies. They'll probably get pegged to a basket of combination of probably oil, gold, and wheat or rice, some type of food. We'll see what they end up doing. So this is a short comparison chart between BRICS and the G7, but I think it's a little misleading because it's showing the BRICS are in orange, rest of the world in gray, and the G7 is in the dark teal. So this is the GDP owned as opposed to the population, but the rate that has increased for the BRICS as well as those that would like to join is at a rapid rate. It's exponential. And I think that that is something, this is why I bring this up, because it's very definitely going to affect our economy, not in the immediate term of the next day, weeks, or couple of months, but down the line for certain. Okay, let's get to banks because that's our big crushing deal, although this is across the Western world. And they're talking about more banks getting downgraded, their stocks sliding, Santander's closing more banks. So as we said yesterday, the small to medium-sized banks, many of them will get merged, failed, or acquired. So we're watching this happen right now. Got another story. This is interesting because it's an ex-JP Morgan gold trader, a couple of them, but they're actually getting prison time and accountability for their manipulating the markets. So these two ran the gold and silver trading at the bank, and they were sentenced 1 to 1 year and 1 to 2 years. And while this is much less than you or I would get, at least it's something. I think it's still kind of a nominal thing, but it's an interesting move nonetheless. Okay, moving on to housing. So today we will get the new housing sales. The existing ones dropped, and they're looking for housing market crash alerts now. So the last time, at the last crash, 2004 run up to 2008, I think there was a big mistake made. I did this included, thinking that people still needed to rent. However, there was another side to this. So, as this is showing, more Las Vegas families are living together. And what we saw were more multi generational, and we will see that more across the board now. As they cannot afford uh, existing homes on their own, they will move in together. That was a huge trend, and we'll see it again. And it's another story of why new apartment construction has slowed on the West Coast. Well, it's not feasible to be building so much. So, financing is getting extremely difficult even for companies with strong balance sheets and large cash behind them. One of the riskiest things to lend against right now is construction. So that's slowing it down. And then the increase in interest rates is kind of eating it at the profit of these builders. So they're kind of just, everybody's putting a halt to their projects or slowing down considerably. So moving into the labor and retail sector, we've got retail obviously slowing down. That's leading to job losses. Basically, companies are looking to cut. And the latest is a story is San Jose tech companies are cutting in the Bay Area, and these layoffs are including semiconductor and circuit board sectors. So that's kind of a new thing. It's a little beyond the retail. Retailers are sounding the alarm of the slowdown as their numbers going down. Express is laying off workers. Walmart is doing well because they're moving into food and essentials. Target is taking a hit because they have larger discretionary items. So we are looking at also pay for new hires coming down. And this was the sticky inflation the Fed is after because people are losing their jobs. So workers being pressured to take pay cuts because they would rather take some pay cuts than have nothing at all. So now I would like to move on to the updates that I spoke about when I opened this. These are, as I say, personal to me, may get me panned. We'll see how these go. So there is move. This story is under the guise of the missing families because of the fires to identify them from the remains and to give our most personal information we possibly can have and cannot change. I urge any of you that have not done one of those tests to see their ancestry, don't do it. This is the closest thing you can have if you have not yet. I'm urging them not to do this. If you have a thought and an opinion on this, please give this to me. I would love to hear it. So the other story that is going along with this is for Disease X. They are doing this testing. They have been for some time. I've actually been researching and studying this for years now and keeping an eye on this second one, as these little buggers are going to help us all stay healthy, quote unquote, saying that with sarcasm. It is a good mass way that does not need permission, so to speak, to spread what they need to spread. So many of you don't know I do have a background in microbiology and genetics. It was my degree. In college, and I had studied and worked in a lab for some years prior to deciding that I didn't like what was going on there. I had a couple of job offers from a entity, if you will, with just letters and turn that down. So at any rate, we will move on with this. I want to get your opinions on that. I will move on and wish you all a green trading day or just a wonderful day in general. And until I see you again, my friends, stay free.